Hello everyone and welcome back to another video. So what I'm going to be doing today is explaining the trades that I ended up taking last week. I know you guys see the plus $160 on the screen right now, but that was actually a trade that I took on Monday and I swing traded into today. So we're not going to be talking about that one today. But basically the two trades that I ended up taking last week, if you guys remember, we were at $3,070. So we ended losing about, I think in total it was around $165. So it wasn't the best week. It was particularly one trade in particular that ended up costing me most of the money. And I'm actually happy that I got out of the position and didn't get the emotions get in the way of trading, because I would have ended losing a lot more money than the $200 that I ended up losing on that one. So I'll get into the one that I actually ended up winning, and I'll explain that one first. It wasn't really a big win. I think it was like $18. It was a short naked put that I ended up selling on Bank of America. We got into the position at $69 and it ended up selling at 51. But because this is a naked put, we actually make money as the price of the option decreases. So we ended up winning $18 on this trade. Originally, my plan was to get assigned on these because Bank of America is a solid stock and I don't mind holding it. But what ended up happening is that if we go ahead and switch over to Thinkorswim real quick, Bank of America was kind of trading down on Friday, which was the expiration day of those options. And so because it was trading down a lot, it didn't really make sense for me to get assigned and pass on the premiums of the following week, which is this week, because the premiums of this week were trading at around 90 to $1 a piece. So that's basically $100 credit compared to the $69 credit that I had originally got earlier on in the week. So what I planned to do was sell or buy back the contract for a small gain of $18 and buy back in. But Bank of America ended up doing something completely unexpected. As you guys can see, it was trading basically flat, and then all of a sudden it had this kind of a decent sized downtrend. But out of nowhere, the last two trading hours of the day on Friday, it just rallied. It had an insane rally from basically low or mid 21s all the way up to a high of basically 22.30, so almost a dollar move in the last 2 hours of trading, which was really unexpected. And then it just continued that massive uptrend into the following week, reaching a high of 24.81 this week. So basically that play would have played out really, really good. Unfortunately, we weren't able to get the into the position at a price which I was comfortable at. But I'll take $18 any day of the week. No one's gonna hand you those $18. So $18 win, nothing too big or fancy, but it's something. And the next position that I'm gonna talk about is USO, and USO is where I ended up losing close to $200, I believe. So basically, my original plan on this, we could look at I don't know why it's not showing all the history, but let's see if we can see here. Yeah, right here we can see. So basically, what I ended up doing was getting filled for I think it was 2 contracts, right? Yeah, I ended up buying 2 contracts I ended up selling 2 USO put contracts at $4 a piece, and I ended up getting a total premium of $137. And USO and the oil market has just not been working out too good recently, especially with oil prices in the May futures contracts dipping into negative range. And so USO, all in all, is a very, very complicated ETF, which not many people are aware of. And the reason why I had originally planned on not being too worried about getting assigned was because the premiums on these options were insane. So like you could get easily 13% premium on an option expiring in a week, and so to me there was value in that, and so I wouldn't care getting assigned, but the reason why I ended up selling was um, because USO was changing their structure on how they manage the ETF, and that being said, they were going to undergo a reverse stock split. And if you don't know what that means, I'll explain that in a different video. But basically, what that would mean was that it would essentially decrease the amount of shares that I had, and essentially rendering the original strategy that I had in mind useless, because I wouldn't be able to sell covered calls if I did get assigned. So I ended up selling for a loss of around $200. Um, yeah, I just don't know. It's probably because it's going in the reverse stock split today, because it was supposed to go through it on Tuesday today, and that's why it might not show the orders. But basically, oh, here it is. Yeah, so these two ended up two for 68. Yeah, and so we ended up getting a total premium of, like I said, 137. But like I said, not the best play. But I did end up selling another put on USO, which I did make up money. So I ended up selling this one at 1.25 because it dropped so much in one day that it was a really good opportunity. So that did net us $23. Not a big win, but it essentially cut down the losses on the big $200 loss on USO. So that's pretty much it for this video from last week. As you guys can see, I had a really, really good start to the week. Almost made back most of the money that I lost. I'm down around $50 since last week, and hopefully we can make that happen, or make that up in the remaining trading days of this week. But I'm really excited about explaining the stock trade that I ended up making today, because it was a perfectly executed trade, and I'm pretty sure you guys are going to be interested in that one, so stay tuned for that video. And as always, thank you guys for watching my videos.